Yeah, so in the next 45 minutes, you'll hear an update from Adam Simon again. So on how things have been in the last quarter, in the last couple of months, and also what Context believe the next couple of months or actually the remainder of the year is going to be. Following that, we'll have a discussion, and Adam, you'll do the introduction for that. You'll hear from that. Okay, well, Adam, take it away.
Thanks very much. So I think that we can move on to the next slide and probably the one after that as well. Yes. So great to see everybody here. The last time we were together was the 19th of March. We were looking at halfway through Q1. So today I'm going to just give a very, very brief update on Q1 actuals, but more focus on Q2 outlook. And then we're going to have a channel conversation with Dave O'Callaghan and Frank Vitagliano about distribution and the future of distribution, and it should be really interesting. So let's move on to the next slide. And the next one. Great. So this is the slide I've shown at all of the previous presentations I've done to the GTDC. It's a 13-week rolling slide using an index based on 2019 revenues. And the key thing to say about it is that we're still seeing consistent, strong performance being maintained. When we get into Q2, the comparatives get to be a bit strange at this time because in Southern Europe, things went into a deep dive in April and May. So this is, in fact, a measure of activity, and it's quite useful just to see it. What you can see is with the two rectangles there, week 11 to 16, 2020, week 11, 16, 2021, you can see that pretty much in all of the countries, they're sitting at a place very different from where they were a year ago. There are some exceptions. France is like still hovering along at its baseline. There are one or two that are below the baseline. But when you look at some of those key countries, Denmark, Poland, UK, Germany, you can see that they're doing really, really well. So the overall message is still extremely positive. Next slide. So when I was with you back in March, we were halfway through. This is the slide I showed, and I reckoned that we would get to 11% growth in the quarter. And so if we go on to the next slide, you can see that, in fact, we got to 11.2%. So our forecasting has got a little bit better. We've been beaten by the distribution market in Q2, Q3, and Q4, but we got it pretty much right for Q1. Once again, powered by mobile computing at extraordinary levels of growth. So not just mobile computing in terms of notebooks, but tablets as well. A huge underlying education sector growth in countries like UK, Spain and Italy, a lot of public sector spending, all those home working categories, a nice boost at the end of the quarter with some value spend. And so we saw that in software and warranties and things like that. So we really saw a good quarter end and very much in line with what we were thinking. But today I'm going to focus a little bit on what the outlook is for Q2, Q3, and Q4. So we have actually invested in the last couple of months in consulting with the channel. We've had various live sessions with the channel where we've been asking for your feedback as to what you see as, particularly we're interested in the drivers. What are the drivers of growth? And we're really grateful for that. And we're about to engage next week in our second round of live forecasting sessions. Our goal is to build up a little community of people who get involved and give their input into how they see growth happening. For us, this is extremely helpful. And we hope that for all of you who participate in this community, you will find it useful as well. So back in March, when I asked the question, where do you see overall channel growth? The majority were between 5 and 10%. And that's pretty much where we come out. Next slide. So we've got three scenarios. We've got a central scenario, which is here, which is 8% growth in Q2, 5 in Q3, and 5.5 in Q4. We have a pessimistic scenario. If you just click, it should come up, Kavita. Yeah, the pessimistic scenario is 7, 3, and 4. And then the optimistic scenario is 10, 8.5, and 8. So what I'm going to do just for the rest of my 10 minutes or so is just go through those different scenarios and explain the thinking that's gone into those. So this is the central case. And you'll see it's the dark blue one, and it's the one that sits in the middle of the graph on the left-hand side, and we'll have that for each of the 3 cases. So the first is a continued growth in mobile computing and home working categories, recognizing that the year-on-year numbers soften as the comparatives go up. The second thing, we're already beginning to see it, is that desktops recover year-on-year growth. It doesn't mean that the activity is that much better. It just means that the comparatives are a lot better, because last year in Q2, we'd come to the end of the Windows 10 upgrade period. And so, in fact, the comparators are a lot easier. So that's desktops. The next one is, we do expect a growth in infrastructure categories. We're still pretty cautious about it in Q2, but we think Q3 and Q4, we're going to see growth there. Again, for those categories, the year-on-year growth is in fact in their favor because of the decline which took place in previous year. Next one. Telecoms have had a big boost. I know it's not huge margin to distributors, but it's still very big on the top line. And there's been a really nice growth in Q1 after a very poor Q4. And so we're expecting it to continue growing. And we haven't gone in quite as aggressively as Q1 in our central case. We think the supply chain is still going to restrain growth, but will ease by the year end. And the last thing is that printing is looking like having a strong year, and LFD is certainly going to recover. We're already seeing some huge year-on-year growth in LFD, even in the first few weeks of April. But then you look back at what happened in Q2 last year, and it was one of the categories that crashed the most. So that's why it's doing so much better. So let's have a look at the optimistic case. So on the optimistic case, we're saying, well, you know what, if supply chain improved and could permit 5% more notebooks to come through distribution, we would see, in fact, a 5.2% revenue growth in mobile computing. And we've added that into all 3 of the quarters. And that one is optimistic, because at the moment there are challenges, not just with notebooks, but with the components that go into the notebooks. We did a calculation based on the percentage of revenue which distribution has got of European cloud revenues. We estimate the distribution has around 5% of Europe cloud revenues. So what we did was we said, just assume distribution with a lot of the investments that are being made now in order to capture share in those areas there, were to take 1% additional share of Europe cloud revenues from Q3. So that's going from 5 to 6% of Europe cloud revenues. That would add around about 3% to the software revenues going through the cloud. So it's a really, really big opportunity. We know that distributors are investing in partnerships. We've heard the announcements of the partnerships with AWS that various distributors have signed. And so we know that there's this opportunity to capture small and medium-sized businesses going to the cloud, and the distribution are very, very well placed to do that. We look at the potential that infrastructure categories don't just recover, but in fact accelerate with the catch-up effect on projects. So we've actually factored that into the higher growth rates. And we've assumed in the optimistic scenario that telecoms continue at their Q1 growth of 10%. So we've put that in for Q2 and Q3. And lastly, in terms of assumptions, we've assumed that computing accessories can continue their growth and AV systems against challenging comparatives. To be honest, this is one of the most optimistic assumptions we've made, because when you look at the numbers and you see just how much these categories grew in Q3 and Q4, it's going to be really, really tough. And when we get into the pessimistic scenario, we're actually looking at negative growth rates in those two areas. And to be honest, even a 5% or a 10% negative growth rate in those areas would be an amazing performance when you think how much they grew in Q3 and particularly Q4 last year. So let's just have a look at the pessimistic case. So the pessimistic case is reduced demand for notebooks and supply chain issues driven by the component shortage, which we're seeing now. And we're hearing more and more about this component shortage impacting all sorts of categories, servers and storage, and all different areas that are being impacted by component shortage. So as well as notebooks and the processors themselves. So that one is definitely possible. The next one is that, in fact, what happens is that the infrastructure categories and services lose out to cloud migration. We've seen a historic trend of year-on-year negative growth in those categories. That was before the COVID crisis. And so we know that that's factored into our forecast. But one of the things which may well be a challenge for distribution is if that continues and has been accelerated through the COVID crisis. So we will see that. Telecoms, we put in a more muted growth in the pessimistic case. And the last one, I think, is the computing accessories and AV systems, which I already mentioned. We put in some negative numbers for that. So that gives you an idea. I hope it's helpful for you, and we will hold ourselves to account and tell you how we do on this. But I hope it gives you some type of visibility, and we'll certainly come back in this forum to the GTDC to give you an update on it. Oh, I do have some jokers, sorry, which is the final thing. So these jokers are quite important, actually. The first one is the EU investment plan. It's 1.6 trillion euros. And we had a presentation yesterday from Isabel telling us about what's going on in Italy. And so much, 27% of that plan is going into digitalization in Italy. And there's so many areas of investment. I think I'd like to be in the Italian distribution market at the moment, knowing that this amount of investment is going to come through. But will it come through in 2021? We have not factored it into 2021. We think it's going to come through in 2022, the actual money. But maybe we'll be wrong. And that would be a joker, a positive one. The second one is that the German public authorities, they've been really solid and they've been consistent in their investment in education, but they haven't done anything outstanding like has happened in Italy, Spain, UK and Poland, which have had massive government investment, but has flowed straight the way through distribution into buying more notebooks and computers and tablets and things like that. The German public authorities are much more inflexible, much more local, and so they have not had the big boost, which is hopefully what will happen. So if that happened, I mean, we're seeing at the moment that the education sector SKUs going through Germany are going through a really strong rate, but it's just that we don't think they've really fulfilled the potential they could do. There's a big future in modern workplace investments. We're moving from the talk about home working to modern workplace. So all these hybrid environments that are being created both at work and at home. And we think that could be a real source of acceleration in this year. And then lastly, these distribution partnerships with AWS and other cloud providers, who knows, this could be a real source of boom. This could be the moment, the takeoff moment for those partnerships. So that ends, thank you very much. That ends the presentation. If anyone's got any questions, don't hesitate to ask. You can either do it on the chat or just contact afterwards. Very happy to engage with anyone on that. Good.
Should I go ahead and just stop the share then, Adam, for the next section?
Absolutely. Yeah.
Let's do that. As soon as I know where.
Adam, Alex is speaking. Just one quick question. Do you have also a breakdown of those growth figures or forecasts by country?
Good question. So we were talking about that internally with Had just recently. at the moment, we have done it on a country by country, very specific basis. So we could have a chat to you about that, you know, offline, about the possibility of doing that, you know, and of course it'd be available to anybody in Italy. But no, we haven't broken it down by country as yet.
Okay, thank you.
Okay, great. So I think you can put the spotlight on me, Dave, and Frank now.
Yeah, and I've done that actually, but for some reason, it is not doing it. And I don't know, Peter, can you try?
No, it does work because I do see Adam, Dave, and Frank.
Good.
Oh, yeah.
Yep.
Great. Excellent.
Okay.
Right. Well, listen, fantastic. So now we're into a different section, and thank you very much for asking me. I was quite flattered actually to be asked to do this facilitation of the next discussion, which is with Dave and Frank. So we're going to look at the current state and, more importantly, the future of distribution. So I wanted just to start, if you don't mind, just with a little bit of context, excuse the pun, to this. So a new player recently emerged on the scene in the world of distribution called Apollo, one of the Greek gods, one of the big investors as well, who started by taking tech data private in June 2020. And then in March, surprised us all. I can say that for myself. I don't know about anybody else, but certainly I wasn't expecting it, with the announcement of the merger of Tech Data and Synex. On the same day as the merger was announced, there was an article in the FT, and the headline was, "Is Apollo the new Berkshire Hathaway?" Now that headline really struck me. When Berkshire Hathaway invests in a company, the world sits up and it looks at that company and at the industry, and it says, there's got to be some value there. So our conversation today is set against that background of the question which investors across the world are asking. What is the value in the distribution industry? And maybe we should get a part of it. So our two speakers today are eminently qualified to talk on this topic. So if I can introduce Dave, first of all, many of you know him, so he doesn't need an introduction, but for those of you who don't, Dave has an illustrious career in the IT industry. After 11 years with Hitachi, he moved to Cisco, where he ran the worldwide distribution, working closely with Cisco partners across the world. After that, he went to VMware, where he ran the global partner organization with 70,000 partners. I've actually seen him in a promotional video from that time for software-defined data centers. And I've got to say, standing in that bar, Dave, you looked pretty cool. It wouldn't surprise me if some of you had already worked with Dave in one or both of these two roles. Then in 2011, he moved into his own consulting activity and became managing partner of Vation Ventures, which helps drive innovation with technology companies working with venture capitalists and end customers. Frank also has an illustrious career in the IT industry. And I know all of you probably know Frank, but just in case you don't, this was just an introduction so that you know a little bit about Frank's background, which is pretty important when you think of the subject we're going to talk about. So Frank is a veteran IBMer who worked for 33 years for the Big Blue Giant, ending as VP of Global Channels. By an extraordinary coincidence, I am related through my niece to his predecessor. He also worked for Juniper Networks as head of global channels and had a stint at Dell also. Frank has a touch of the Frank Sinatra because he was tempted out of retirement in 2019 to head up the GTDC, where he has just celebrated 2 years. So today we're going to have a conversation. Now, I suspect that when Frank and Dave get going, I'm not going to get a word in edgeways, but I'm going to try to guide this a little bit, and hopefully we can explore this topic together. So I'm going to start with Dave, and before we get onto the value of distribution, which is obviously central to our discussions, I wanted to make sure that we understood what today's tech companies are looking for, and specifically when they come to Europe. So you deal with venture capitalists and the companies which they invest in, the so-called portfolio companies. What are the venture capitalists and portfolio companies looking for when they invest in coming to Europe?
Thanks, Adam. And for those that I have met on the call, it's great to see you in 2D. I'm hoping that by the end of the year, I can come to Europe and see you all in 3D, because that'll be a wonderful thing to do again. And Adam, on your question, first let me position Vation for those that don't know you. My son actually had the vision of Vation, which was to connect the VC world, which was his background, with the channel and the end users. And so that upstream, where the money is coming from, to the downstream, where the money is spent, excuse me, was really the vision to connect all those pieces. And in my opinion, distribution is the orchestration point in the center of that. In the high-tech world, that's been where it has all happened, is that pivot point. And for Europe specifically, that's extremely important, right? When you look at the VC investments over the last year, you might think, well, was 2020 a good year for the VC investment world? And it was a record year. It was $156 billion of investment. The year prior was 130. So you can see that in a time when governments were doing a lot of investment into the world, that money flowed all the way through to the VC. That VC has lit up a lot of portfolio companies. The stock market has embraced them. Things like Snowflake with $3.5 billion worth of IPO value and more now. So clearly the market is there for the innovator, and we help the innovator get to market. In Europe, that means coming through all of you, because without that reach, scale, currency management, everything you've done for a very long time, the innovators would not be able to get there. Our clients like HashiCorp are selecting distributors in Europe that provide them that capability and enablement. So I congratulate y'all. You know, Europe is an incredibly important place for the American VCs and their portfolio companies. So keep doing what you're doing.
Is it possible to say, Dave, where the investment is really headed towards? What type of tech?
Yeah, I think probably, everyone on the call certainly sees that SaaS has eaten or eating the world. And when you dig that famous quote apart, what's really happening there is the intelligence is moving from the hardware to the software, and the software is utilizing AI, machine learning, and that is happening at the edge of everything, and that therefore it needs security. So AI, machine learning, data analytics, business intelligence, and at the edge with security and wireless. And in the world of 5G, companies from Europe like Ericsson have purchased Cradlepoint out of the US to really take advantage of that of that approach in 5G and the scale that it brings. And Ericsson and Cradlepoint have a very strong distribution relationship, the Cradlepoint component in Europe today. So I encourage all to be looking at what 5G means to you.
And what about the more mature OEMs, Dave? What are they looking for from a European perspective?
Yeah, some of those folks are clients like a Riverbed. Riverbed has long been in the channel and utilized European distribution to get to all of the countries of Europe. And the challenge that I like to call the matures is re-emerging technology. As a company like Riverbed moves from a device, a steelhead, into the software-defined world, into the cloud world, they look a lot like a portfolio company coming from a VC. They're PE backed by Thoma Bravo, and Thoma Bravo, just like Sequoia as a VC, needs that new re-emerged Riverbed to leverage its relationships You know, I know that Riverbed uses Nuvius and other distributors in Europe to create that reach scale. And most importantly, for all on the call, what is the orchestration layer that you'll be able to do for those brands, whether it's the portfolio company or it's the re-emerging? They all need you to make that market. They all need you to orchestrate how they can make that market with your resellers, with your GSI relationships, with your other technology partners to do the meet in the channel. How can you orchestrate that relationship? And I believe where you can orchestrate, you will create value and margin for yourself.
So that word is a key word. I know it's one that I've heard you use before, Dave. And so you've had a lot of involvement in distribution in your career. You've done work for the GTDC. You've just brought out a paper about the future of distribution. How do you see distribution evolving, and what does this orchestration mean to you in terms of, you know, the role that distribution is going to have in the future?
And maybe I'll give you two thoughts to put into your minds. The first one, when I think of orchestration, I think of like my Apple Watch, right? My Apple Watch here, it wakes me up in the morning. It tells me to stand up every now and then. It tells me to breathe. It tells me to go on a bike ride with the Strava app, and it collects that. It has a whole host of applications on there. Now, they're not just a warehouse of applications on my Apple Watch. They interact with one another. They orchestrate between the two. And Apple does a great job of how does Strava interact with the other health apps so that the data is shared across. So in the distribution world, I see it as there's a whole set of upstream from the VC, portfolio company, and OEM. Those are all upstream from you. You are the pivot point, the potential orchestrator for the downstream, to the GSI, the tech partner, the reseller, the MSP, all of those onto the client. You're at that pivot point to orchestrate how those brands come through you into the European marketplace. Are you orchestrating it, or are you simply fulfilling it? Every day I talk to portfolio companies, and I talk to re-emerging tech companies like Riverbed, and honestly, they have a frustration many times that the distributor is merely transacting, not orchestrating. So I would encourage you all to find the capabilities most needed by those companies in the enablement world, in the making of markets that truly create value, and that value can be monetized.
I can see Frank nodding whilst you're talking. So Frank, how do you see distributors being the orchestrators and creating markets?
Well, I think, first of all, I agree with the points that Dave mentioned. And I also think it's really important to note that, you know, Dave is working with these VC companies that are making massive investments in, you know, emerging technology companies. And in my experience, what I've come to realize is people spend a lot of time thinking about making the investments in the technology and less time thinking about how do I get that technology to market. And that really is where the value of distribution kind of comes into play. The thing that strikes me about this is you got to understand all of the capabilities that distribution has. A lot of the arguments or the discussions recently have all been on, well, what's distribution doing in the role of XX as a service? What's distribution doing in the area of cloud marketplaces? What's distribution doing in the area of security, et cetera? And those are all being discussed. There's huge investments being made. There's a lot being done. But you got to step back first and have the conversation about all of the things that distribution provides. And the fact of the matter is that and people don't, you know, typically want to talk about this, but some of the legacy things, the things that have essentially been important from day one in terms of distributors helping vendors get product to market, still matter. However, they tend to get taken for granted. And they tend to get taken for granted because people are, one, used to it, two, it's been there forever, and three, they don't spend time to figure out what it would cost them to replace that, right? And in fact, just to give a little plug to Vation, Dave's company did a paper probably 3 or 4 months ago called Distribution's Edge. And essentially what they did was they looked at, you know, the SG&A, the marketing activities, and the ultimate investment required to go to market on the vendor side, compared it to 2 or 3 different routes, you know, direct to solution provider, and certainly distribution. And it was very clear that the investments required at the vendor level are just cannot be replicated. I experienced it 3 times with 3 different vendors, and I can tell you all 3 at one point talked about it, wanted to do it, and recognized they couldn't. So when I look at this discussion, when I have this conversation with people, what I think we've got to do is we've got to step back and not just look at what are the capabilities for all of the, you know, emerging digital transformation things, but what are all of the requirements in its entirety, and what's distribution providing, and where's that value? And I'll leave it there. But the one point I would also make is it's pretty clear that there's significant value there, because the VCs have seen it, private equity companies have seen it, and the public markets have seen it too, for those, you know, distributors that are public. So there's significant value there, and I think people are recognizing it and understanding it.
And so, Dave, do you recognize all of that?
Yeah, I would double click on a couple of things that Frank said there. First that idea of the early stage company, or even the later stage company like a Riverbed, understanding that it's not just product, it's product and go to market. Many times those early stage companies, they you know, the CEO, the founder is a brilliant technical person, and they believe that their thing is going to sell itself. How many times have we all seen that, right? I don't even need to hire a sales team. This thing it's unbelievable. And what they find out, and the VC now encourages them to do, is with us, triage those that need to go to market. And so that product market fit is proven in you, the distributors. You know, you're the ones that can prove product market fit at scale. Now, Frank's second point is the financial analysis. The financial analysis is quite clear, and it's on gtdc.org, the tool that we created. And if your potential customers, or your customers that maybe are in the US and thinking of coming to Europe, point them to that tool, and we will be happy to walk through it with them. That shows that at scale, it is very clear that that distribution is the only route to continue to accelerate at an accelerating rate their financial performance, right? So if they decide that they want to hire a sales rep every month, that is a very linear approach to growth that actually flattens over time, where through the channel, through distribution, you can still create that accelerating growth, which is what Frank was pointing out with that route to market analyzer that we have. So just point your folks there, or if you want to put it on your own web page as a place for them to leverage, feel free, just give us a call. But I think those points that Frank made are really, really important.
And so, Frank, there has been all this M&A activity going on in distribution, and evidently there is a belief in the value of the industry. Would you like to comment on what you think is driving this?
Yeah, well, there has been. I mean, it seems like over the past couple of years, that it's just never ending. In fact, there's a lot of people on this call that have been part of that, and congratulations to all of you. There's one thing driving it, and I think it's the recognition of the value that is inherently part of what distributors do. I mean, this is smart money. These aren't fire sales that are happening. These are significant transactions with very significant multiples, in the marketplace of, in many cases, mature companies that have been around for long periods of time with sustained success. So, very, very positive things. And the fact of the matter is that I think what folks are recognizing that as technology continues to get more complex, and that as we continue to add the elements of the digital transformation that are clearly happening and are you'd argue have happened, right? But it's continuing. It's, people talked about cloud forever and, when is it going to get there and how do we monetize it? And it's done, right? That's happened. Now everything as a service is like the next big discussion point. Everybody wants to talk about it, and there'll be a transition. There'll still be obviously a hybrid approach to the market, and what distributors do in the traditional space will still be important. However, the opportunity to add value and create value has been recognized by world-class companies. You mentioned Apollo and Berkshire. Well, during that transaction, it was probably pretty well noted that when Apollo was negotiating to buy Tech Data, that Berkshire got involved for a short period of time, right? It was quick, but there was discussion that they were also involved in that. And so I think the net of it to me is that I think the marketplace, despite all the discussions, from so-called analysts about, what today's distributors need to do to get to the next level, I think the marketplace has recognized the value that's inherent, and have also recognized there's room to grow. So to Dave's point, it'll get better, more investments required, more innovations required, more process is required, to get the emerging sort of trends, to become commonplace, into the marketplace. But it's happening. So it's not like, there was a period of time when lots of companies who got disintermediated, it happened because they didn't recognize what was happening, they didn't acknowledge what was happening, and they didn't invest in what was happening. That's not the case in distribution. They recognize exactly what's happening and are putting the processes and the procedures and the people in place, in technology, obviously, to capitalize on it. So I think it's a very strong story.
Are you seeing the same thing, Dave?
Yeah, Frank used the term smart money, and hanging out with the VCs and the PEs every day, it's clearly smart money. The returns that they get from their investments are very high, and for them to be investing in distribution actually validates distribution. Now, I think that some analysts out there potentially, they look at the high-tech channel and they think of the legacy VAR, and then they believe that distribution logically is tied to that legacy VAR that may just be cash flowing their business until retirement. And we all know those VAR owners. But if distribution in Europe can tell the story that yes, we still serve the legacy VAR, and we will until they retire. However, we've built routes around MSPs. We've built routes around GSIs and regional systems integrators. We've built routes around orchestrating the technology partnerships that are across our line card. Those routes to market are growing at extreme rates, right? You look at Snowflake, and their route to market has predominantly been the GSI world. Yeah. What are we all on this call doing to get closer to the GSI when they may not want to necessarily transact? They may want just the services revenue on the back end. What's the transacting model that a distributor can bring to the table with the GSI? So when analysts write about distribution is following the VAR, I don't think that's the case. I just think the analyst needs to have done more research on the other routes as well.
Great. So maybe just to finish off today, we could have a word from you both on how you think that COVID has impacted the distributors from your perspective.
I'll start, Dave. I think, well, first of all, and I've said this publicly, I've written about it publicly, I think the response that the distributors provided to the pandemic, starting more than a year ago, obviously, has been nothing short of extraordinary. When you look at all the different industries that, had significant supply chain constraints, for the most part, and I know now we're starting to see some component issues, but for the most part, for the first 6 to 9 months, the role that distribution played in keeping the global IT supply chain flowing was extraordinary. And it was extraordinary from a lot of fronts. First of all, the transition to just them being able to do business, taking all these rooms full of people that typically, they've had for service and support, and sending them home overnight and having them up and ready to support their customers was pretty amazing. The second piece was the areas that couldn't be, work from home or virtual, warehousing and logistics and those things, and the processes put in place for that quickly was amazing. But then the services provided, the work from home types of services, bundles, and then finally, capital financing, what distribution has traditionally done, became more important than ever. So that, I think, leads to what's happening now and what's going to happen. And I think, obviously, as the world comes back to, more normal, and it's starting to happen, obviously the hybrid piece will continue to become very significant. And my view is the productivity gains that we've recognized over the past year in being able to transition and do business differently will enable us now to figure out a hybrid approach that will be better than what we had previously. So very significant, tremendous work that's been done. And in my view, distribution led the way and has continued to lead the way and will going forward. So very excellent.
Have someone to pray for there. So it's been a tragedy. From a business perspective, though, if you follow the money, the 156 billion that the VCs have thrown into the market, the supply chain issues that you're all central to, that Frank mentions, I agree with. The area that I would ask you to consider where you can make a difference is your BI, your business intelligence. When you have the data, and Context clearly has the data to support the data you have, but that's so important. The US startup, the US re-emerging company can't travel to Europe right now to go validate. When I was at VMware, I would travel to Europe and I'd meet some of those 70,000 partners and get my own validation done. I couldn't do that now, right? And so your ability to deliver BI, because out of that 70,000 partners, there were only 1,000 that truly mattered. When I met with a distributor, if they could deliver me the BI that said, here's another 100 that we could bring you across Europe and do the enablement, I would have invested every time I had that meeting. So I'd encourage you in this COVID world to think about your BI and how you can leverage that to create stronger relationships with the manufacturers. Can't thank you enough for having me today, Adam.
Great. It's been fantastic. Thank you so much, both of you, and for all of those really great insights into distribution, both its traditional, its emerging strengths, and those thoughts at the end about BI, a very good way to end. So from my perspective, I'd like to hand back to Kavita or to Peter and just say thank you very much for having Context as well. And it was a really enjoyable conversation.
Yeah, and many thanks as well from our side, and again for all the insight you give us. So let's hope your numbers come through. It's well, pretty optimistic, but so far you've been right. So I guess you will be this time also. Yeah. So if you want to hear more about this, you'll see us again probably end of June. I think we'll do one more just before the summer. So we'll reach out to you in the next couple of weeks. And well, with that, I'd like to end the discussion. So
Yeah. And I'd like to encourage everyone that if there are any topics or anything that you'd like to see us address in these series, feel free to drop Peter a note or myself, and we take all of that feedback very seriously. So thank you.
okay, thank you all, and bye.
Great. Bye.
Thank you.
Bye.
Thank you. Bye. Bye.